Welcome back, everybody. This is a Tuesday live stream from a Market Stalker D. Slightly different vibe to Top Step. So, yeah, let's see what's going on. I did a couple of trades today. The gold trade that I had before Jolts was quite good. DAX trades, I tried a couple and it just didn't really go anywhere. It was a single direction day with a mean reversion, but I tried to get in on the mean reversion. Obviously that didn't work, so I bailed, and the second one was a little short that just covered some of that. So yeah, nothing there to speak of, and now that session is pretty much over, and we're gonna see if we can get some other trades going. Crude oil has been pretty bullish, so let's maybe focus on that. And I do have sort of another camera here. Let me see if I can. Yeah, so this is this camera from this side, just to capture some of the craziness that I've got here. Probably should switch off the auto exposure, but there we go. Live and learn. Right, let's go back to this one. It's yeah, so we're gonna see if we can find maybe a long crude oil trade from somewhere, because this is the daily chart of crude oil and not much breather, so it's just bullish, a little bit of a consolidation, like a speed bump here, and then it just kept screaming. So I wouldn't really want to fight that. Just gonna have a look at the weekly chart, and I mean it's reaching that supply, but because of the time of the year, summer, being pretty bullish in general for both crude oil and any products that result from it, like RBOB, gasoline, and even natural gas. Sorry, heating oil, not natural gas. So heating oil, gasoline, and crude oil tend to go up in the summer months, at least for the first couple of months. So June, July, this is very expected, very much within the statistical expectations. And yes, we do have some supply, which is why we're seeing a little bit of a pullback here, but we still opened way outside value, and they've already gone into that inventory adjustment. So now I'm actually looking at this area around 83. I know the value high is a little bit higher, but crude oil likes, sorry, it's a little bit, yeah, it's higher than ADR, but because crude oil likes round numbers, we're going to be trying to get a position in and around this area that's about 20 ticks or so. So yeah, we'll see. Okay, so Rita and Claudio here. Hello guys, very good to see you. Puneet says, hey D and everyone, I took a gap fill trade. Well done. I don't like trading during the initial balance, and one of the things that I sometimes look for is for price to kind of pick up speed, and it kind of picked up speed pretty late, around 83.90. So it just didn't really look that great to me, so I stayed out of that. And most of the time you will see me stay out of the initial balance trades altogether. So now I'm looking for maybe an auction fade from this area at around 83. It's not going to be a failed auction because we've already moved a little bit further out than I would like to see. So it is going to be an auction fade. And obviously we have a little bit of danger of a unidirectional day where it just goes into a value acceptance, at which point the trade for the value reversal is not going to be on. Okay, so we have a plan there. Let's also make a nice solid plan. Why is this dark. I have this dark theme on Windows, but I can't see anything. It's like, what is this? With the lights on, I'm just blind as a bat when it comes to dark themes. So I'm going to try maybe changing at least the letters to something white. What is going on? Doesn't want to change. Why is that not changing? Okay. Right, so this is the plan that I usually use for myself. So we're going to say CL, but we're also going to have a look at RBOB because they're pretty correlated. RBOB is futures, gasoline futures. And we're going to look at them side by side, see which one looks better. Somehow I suspect crude oil looks a bit better from what I've seen earlier. Okay, there it is. White charts. I know some of you dislike that, but hey ho. Right, so it looks pretty similar here, I would say. Sometimes one of these can open inside value and the other one opens outside value, thereby giving a little bit better outlook for any kind of momentum plays. Let's just adjust some timings. So the ADR and ASR are kind of in the value area, which is okay. RBOB and CL, they're kind of like NASDAQ is to ES. So you can use, on a lot of the days, you can use CL levels to time the RBOB trades a little bit better. Gold is going into what looks like a range-bound situation, so I'm happy I took that off. We had jolts, and jolts typically bring, you know, it's a pretty important release, so I don't tend to hold any London trades into them. But yeah, I took a good chunk out of this. I actually went in at 28.7, I think it was. And then I took it right at this overnight high because metals are bullish in general for various reasons. So I didn't necessarily want to fight that, but obviously jolts has brought some volatility into this move, which is also perfectly fine. So yeah, we'll see if we can find something in gold, maybe when it develops. If we get a neutral date type, there could be a nice setup yet again from that area of the where previous overnight low, Asia low was. But now we have the overnight low from London, which is even closer to the average session low, currently located around 23.27. And literally they're just there on the money. So that's definitely a level of interest. I'm going to mark that. And in a way, what I would be looking at there is maybe a stop run and then a reversal. So I wouldn't be looking for the trade to just kind of get close to it and then reverse. I would want to see it running through and then reversing, because that's kind of the name of the game during the quieter markets. And this is the summertime, and you generally have less liquidity, even though you might have pretty crazy moves as a result of low liquidity, because the moves are less reliable and therefore there's less participants. So a lot of the market makers will take advantage of that. And that's why I look for more stop runs than usual. Okay, so there it is. So let's start with the weekly chart on both of these. Delete that. Ryan says, regarding Blahtech market profile, how come when I switch to TPO only mode, the POC and the value areas change price? Well, if you're looking at the developing values, of course they're going to be changing price. But what's happening there is you probably have the tick value maybe set too high, and they could be doing the rounding up to the next available level. What typically happens with market profile is that people like to dick around with the settings without knowing exactly what they do. So we suggest default setting at first, and then if you want to make it prettier or something, you can maybe go up in tick value, but generally I prefer to look at the core tick value or core TPO profile with letters on the side, and then just use that graphical overlay for some visual cues. That way you're not going to get any weirdness, and you can use letter T on your keyboard to sort of make the letters smaller if they start to run off the screen. Like you can see me doing that here. If you have a look at the right hand side, this is where the letter TPO profile is. So if I have it on core sort of 0.01 tick value, that is filling a lot of the screen. But if you want to make it smaller, obviously you can do that with letter T. However, just beware that as soon as you do that, there will be rounding errors because it's going to start locking onto the nearest round number, and thereby you're going to see value areas and POCs are going to change values. So I'm guessing that's what your problem is, because I've had other people who are like, why is my value up here and yours is down there? And I'm like, well, what have you done? And then it happened probably like 20 times. And then I would ask them to send me their settings, and I would see that they've actually upped the tick value so they can make the TPO profile on the chart look better, and thereby they messed up the calcs because they've gone up to the nearest round number. So yeah, try that, see whether that helps. Good morning, Brian, good to see you. Right, so weekly chart. Let's put these two twinsies side by side. Right, crude oil looking a lot stronger than RBOB on the monthly chart. Why? Because crude oil is already going through this selling wick that was pretty horrendous. Whereas RBOB is kind of stopped at the value C line, so conterminous line of the weekly supply is giving a little bit of a reaction here. So we'll see whether that's sustained or not. But if we're going to use crude oil as a guide, then we should see some buyers stepping in at some point. But let's not rush. Again, it's Tuesday. We still have the inventories to get through. And then we also have 4th of July on Thursday. So that's going to be a very short day. We can look at ES as well, because I've actually been pretty good at calling ES trades during the first sort of 3 hours of the session. Every time we're in fast markets, whether it's with Nick for a tick or with Anne-Marie, we seem to be finding very, very nice trades there. So it's been definitely playing with the within the statistical values. So that always helps. Markets that behave themselves. Okay, so I'm going to put down weekly chart. CL moving deep into weekly sup. RBOB reacting to weekly conterminous line. Okay. Daily chart. Same thing again. Looking at where we are. So Q points on reactive. We've gone deeper into the Q points on both. So all I'm going to say there is just D1 Q high being ignored. The next thing on this plan is going to be the value area. So we're going down through the multi-time frames using different concepts to come up with a plan. And this is how I can make those magical trades that you see me do. So both of them open above value and above range with some gap. So it's gap up. Now at this point, I like to use edge full. I used to use my own, some of my own stats and algorithms, and then I would have to rerun them every so often. Well, now we have edge full for some of that, because obviously it's not the market stalkers method, but they do have some pretty good ways to derive some data from it, which is pretty cool. So we're going to use NYMEX hours, 4 p.m. Okay. And then I'm going to change this to CL first. Let's have a look. So some of the things that I like to look at is the green and red days by weekday, right? So it's Tuesday, and for year-to-date period, 56% of the days were red, 44% were green. It's kind of 50-50 almost, so that's not really that strong. And that pretty much remains, but there's a little bit more of red as we get into the 3-month sample size. So I'm just going to say Tuesdays, 58% red. So we might have something there. So value acceptance becomes a possibility when we see those kind of stats. Now, initial balance breakouts. What I'm looking for here to see is whether we have anything telling us that you might get either a single break or a double break with quite some statistical difference and statistical relevance. And you can see on a 6-month sample, it says 62% is a single breakout, okay? If I go down to 3 months, that starts to fall. It is closer to 50-50 than anything, which is which is kind of not that helpful. But on a larger sample size, it says 62% has a single break, and that's year to date. So that could be useful. 62%, you know, something to keep in mind. Let's look at a gap fill as well. Now, they do the gap fill a little bit different. So I've actually asked them if they can use the value area calculation and then do the gap fill in relation to the value area. So I've spoken to Andre about that. And I think at some point they will be adding it. I will reach out to see how far they got to it. They got with it even. But their gap is slightly different. So if you effectively have the closing price of the previous day and then the next day opening price is with a gap, it basically looks at how often that gets filled. So yeah, let's see. So gap fill for Tuesday, gap up, 60% filled. So we are seeing that is within the stats as well. that most of the gaps on Tuesday, 60% of them will get a fill. Again, not the strongest stats there. And this is not the biggest gap either. But let's say, let me just see where the previous day close was. So that was, yeah, so we've already done that. Because they don't look at value. Remember, they look at the previous day closing price, which was a bit higher. That was a settlement. So we've basically filled the gap already. So that's, this is a day within the 60% probability. So nothing unusual there. All right. Let me just tidy up something over here. Okay. All right, let's continue. The next thing that I like to look at is how big is the initial balance range, and then decide whether that initial balance range is big or small, or whether we're overshooting massively. So initial balance size, I would say, on crude oil, let's have a look. It's sort of on the larger side, but it's not super large. However, that does open up a possibility for an auction fade and a continued move through the initial balance as an extension of that. ADR was not exceeded, a SR is not exceeded either, and they're nicely matching up with the high probability reversal area of value high. So I'm going to say this is close by, ASR close, pretty much at VWAP. Another thing that I like to look at is crude oil VIX, because as you guys know, February, March have been absolutely horrendous, where there was no follow through apart from the first hour. So initial balance would have some movement and then everything would die. So to avoid that, I started looking at oil VIX, because I noticed that when the periods when we have really good movement, typically oil VIX OVX is above 35. So that's another little cross check that I need to do, and it affects how we're going to position ourselves and how we're going to fish for positions in general, entry timing and all that. And as you can see, it's underneath 35, so that puts everything onto the slower side, which means we have to be really careful with entering positions, and probably best to look for stop runs or very edges of the established range, rather than waiting for a 30-tick move away and then trying to look for follow-through. So I'm going to go currently 26. And then another help from Edgeful will be to have a look at what the average range actually is for the session on the weekday that we have. What is that? Intraday range window. That's what I'm looking for. Anytime, internet. Okay. NYMEX. That was weird. Okay. No, not working. It's not working, guys. What is going on? Let's try that again. Okay, here we go. Here we go. Is this because there's like a problem with the session or something? I can't do the session here. That sucks. All right, so it says that it's 132 normally, 114 the last sort of 3 months. But I can't manipulate the session here for some reason. Oh yeah, I can. Hold on. Oh no, I can't. It would be good if they can like move this half an hour. But yeah, it's still helpful. So it means that from about 9:30 Eastern all the way up to 4 p.m. we should have about 140 take of range on average, and that pretty much finishes the edge full checklist that I usually have. Just gonna say NYSE here to know what I'm looking at. And now you can kind of measure where that would fall, roughly. So if they're measuring it from the 930, which is this second candle of the NYMEX initial balance, so if we drop it, it actually puts it down pretty deep into the value area around 82.55. But because it's a very strong trend, and because I know that these statistical measures are also pretty good, I will probably still hold true to my original idea that 83 up to 83.20 is our sort of reversal point. And that can obviously overshoot a little bit. Everything is a zone. It's just this is the earliest points that I want to be looking for a particular move in the opposite direction. And for now, for the grasshoppers, I would not be getting in on this because we are really close to the average session ranges, and we're not even down to that 140 ticks range yet. So some caution here and some patience to let the day develop a little bit further. And if it's truly something that will happen without us, so be it. There will be another trade at some point. So we need to be very, very patient here. So let's continue on with the hypos. I know this is a drawn out process, guys, but this is how you come up with really good hypos and you don't do stupid shit in between your levels, which we want to avoid at all times. We want to avoid being Muppets. And trust me, I've been there too. I'm not completely immune from being a Muppet. It's just usually with me, it kind of lasts a day. And then the very next day, I'm just like, what the fuck am I doing? So some people, they're like, Muppet day 1, Muppet day 2, Muppet day 3, blown account. So definitely want to avoid that. Just doing something here, looking at I've had some like connection problems with Bookmap and stuff, so I'm just making sure that that's all still working correctly. Okay. Right. So hypo 1, since it's so strong, the trend up is like really strong, I'm going to put hypo 1 as failed auction or auction fade, depending on how deep we fall, if it happens. So value high, ASR, ADR, low, reversal. 83, round number of interest. So ideally you want 83 number to be defended, maybe to like slip by about 10 ticks or so, but ultimately I don't want to see it all the way through 83 and then holding below it, because that would be a bad sign and that would open up the possibility for value acceptance. Now, in case that we miss this and it just starts running higher, let's think what would be a better way to position ourselves. So in that case, I would probably look for a 30-minute conterminous lines of demand and then use that as some kind of a messy version to run a neutral day hypothesis. Because if you look at yesterday, one of these had, so crude oil had a neutral day that just carried on going. This tells you of the strength of this market, right? It tells you that it's ridiculously strong, right? Just playing around with the scenes there. So we couldn't have something like that today as well. Reason being is that summer demand that we usually have for these typical products. So that's my second hypo. So M30 demand, see them as bounce point after FA appears. Looking for a neutral day and maybe even another asymmetrical auction higher. Okay. Mohammed has joined us. Hello. Now, hypo 3, we have to take both sides of the story. So if that weekly supply from RBOB and crude oil is now taken hold, we need some hypos that will account for that as well. So what could that be? Well, a few things. So we can have the weeb. So weakness from inside the initial balance from this supply all the way above 84.15. It's probably 84.17 or something if I get my crosshair. Yeah, it's 84.17. And that would mean playing the range, the established range in a 30-minute chart. So looking for the supply to stay, and then you're just effectively looking for a rotation back to the lows. And then another short would be, so I have a couple of choices there. Initial balance low as bounce point into a value acceptance. Now, if we go into a clean value acceptance, I would probably sit that one out and wait to see what happens and whether we get single prints as we're printing the value acceptance or not, and thereby ignoring the average session ranges. So very, very particular things that I want to see when it comes to value acceptance, which is against the trend. So this is actually aggressive and lower odds, but not improbable. It could happen as an alternative hypothesis, just in case we get that market state change. But it's the last hypo I have because of all of the other contextual things that we've got going for the longs. So that's my plan for today on these two products. And we're going to do something similar for gold as well. Maybe even ES, but maybe not as detailed because those are not my main products. So yeah, I can just kind of have a look and see exactly what's happening. So gold already, I know where we are on the weekly and daily chart because I already created a plan for London, which I nicely printed out on a piece of paper because I'm old school and old. Deviate says I'm doing dishes again. Very good. Hey, it's one way to pass the time, right? Okay, so very, very flat on the daily on GC, yeah? Very range bound. So we have a range from about 2350 to the upside, and now attempting to establish a range at 2327, but a larger range there is actually all the way to 2304. So that's kind of what we're looking at. 4-hour chart obviously has a bit of phase 3, overnight trading, London trading, then a big pop before jolts, and now we're sort of reacting to it. So there's nothing really there for me. Quick overview of the profile. Building structure already inside the initial bounce, big drop after jolts. Opens up a possibility for that play from the overnight low and from the average session range low. So I'm going to put that down as my first hypo. Let's go for yellow on these because it shows up a little bit better. So I put ASR low / London low, neutral day fade. So that's where this little box is. I don't see a possibility for a good SEEB because this was London and it's a little bit messy. I don't really like the 3 inside up candle. I know that Dakota is a huge fan of 3-bar reversals. I'm not that big of a fan in GC and CL in particular because this third candle tends to be pretty big and then this demand tends to be pretty low down in the overall structure, which makes it very difficult to hold. And the likelihood statistically is that they're actually going to go all the way to the low, smash through it, and then reverse, especially given that it's summertime and all of it. Simon, it's going to be either Asia or London, depends on how the chart's set up. Like I actually had Asia low when I was trading gold earlier. So that one was a little bit higher. But we did have London average session range low, and the same thing happens. So if I put this marker, the orange marker for the overnight low to be here, the average session range was actually at 2327. And then the market did exactly what the scenario that I'm talking about, went all the way down, swiped Asia low, tagged the average session low from London, short on London because I don't take COMEX into that calculation, so I cut it off, and it literally just went. This is the reason why I was able to get into a trade from, it was like from a 1-minute chart with a little bit of help from Bookmap, but I look for very specific things that might be a little bit difficult to catch unless you've like seen them about 1 million times. This is something that I used to do pre-COVID, and somehow, I've talked about this before, I got quite complacent while COVID liquidity was happening, and I would just pop in my stop and just almost kind of like walk away. And there was so much liquidity that it would take the price away from the entry very quickly. Now that is long gone now, so we don't have that as an option. But the second choice here is that we get stuck in this rotational day. Something I want to have a look at Edgeful as well here, just to get those stats on our side. I'm not going to bother you too much with it, so I'm just going to do it in the background. Although, I don't know, do you want me to bother you like I did for crude oil? Do you want to see the process? Let me know. Otherwise, I'm just going to do it off screen and just put down the data. I've also got great news. So we're going to be doing the London session twice a week on Top Step TV in a couple of weeks' time. So that's pretty exciting. We still don't have Eurex. So in the beginning, it's going to be more educational. I'm probably going to be more structuring it as a class to show you how to come up with a good solid trading plan and all of that. But yeah, do let me know if you want me to go over these edgeful details again for you, or whether you're just like happy for me to do it off screen, because it's boring. Fucking boring, D. Get it on. What is this? This is GC. So I'm gonna go 8:30. So just quickly. We had a below value open. That's not really that relevant now because we've wagged through it like it doesn't exist. Oh, interesting. This intraday range window is a bit buggy. Like it keeps crashing on me for some reason. $240. Okay. What have we got now? We've got 142 for the session. So yeah, it's probably some summer drop down. Where's the Asia session breakout? There it is. Okay. Yeah, so one of the reasons why I want to have more setups in relation to some kind of a short as well as more longs is because on a lot of the days we usually don't get the double-sided break. Double-sided breaks in gold tend to be a little less reliable because they only happen like 30% of the time. But still, you need to have, neutral day. And, when you can match it up with some other things, then it makes more sense. Performance by weekday. Is that what I'm looking for? No, I'm looking for green and red days by weekday. That's what I want. Okay, so 56% green on Tuesdays. Not the strongest. Okay, I'm still going to put that down just to kind of keep it. 56% green Tuesday. Right, crude oil is tagging that recession range low. So we're going to watch that on a small time frame. Where are we going to put it? Let's utilize this chart here. Let me just make these candles a little bit more presentable. Still a strong move down, so we're not touching that now. Because I was looking at this during London. The bar spacing went a bit weird when NYMEX kicked off with their massive volumes. So I'm just going to try and... Now what am I doing? Is it bar spacing or bar width? No, we need to make the bar width less. Alright, that's looking better, isn't it? So we need this to stop freaking out now. So we cannot go in until there's a little bit of structure. Not much structure, but, you know, it cannot be screaming down with, like, a lot of volume. I would also like it to tag the ADR, which is at the round number. It's a better, much better area. And even on Bookmap, there's stack of orders right at 83. So we really need to grab those first before we're going to do anything. So you can see them very clearly like an eyesore in Bookmap. Ideally, I want to see a range, obvious range with sort of higher lows and higher highs first. This one is not what I'm looking at. This is the old thing from the drop. So only once it reaches down to your levels, then you can look at these like really small time frames to time the entry. Remember, the VIX is not that high. It's like 26. We want it to be over 35 for really good moves in crude oil. We don't have that. So that means we have to like nitpick on entries a lot and be patient to get the most optimal entry if the trade is going to work out. So even if I don't go into a trade that isn't matching all of the parameters that I want to see in this kind of market environment, that's absolutely fine. I can just observe it, hate watch it, like Nick for a Tick likes to say. Okay. Let's have a look at ES as well while I'm waiting for crude oil to settle. Okay, ES has average daily range high at 55.40, thereabouts, which would mean a responsive short maybe, but there are some stats around July and stuff that I'm not too keen on shorting equities. So I would prefer to get a pretty decent pullback first before I do anything with it. And one of the good areas for equities, because they're a little bit quirky, a little bit different than some of our other products, VWAP can be actually a very good level. So 55.30 would be a version of strength from inside initial value, so it's a version of SEEB, but I certainly don't want to be going long into an average daily range high when we have a potential for a failed auction there. Not really a strong auction yet. It's just creating some poor highs. And structure, we have 3 TPOs, ABC. So that means patience. Again, that word, that annoying word. Patience. So that would be my first hypo. This is a trade that I took on my live account. When the house account last Friday, they kept trying to go up. but it was the wrong time of day. They kept trying to long it, and the failed auction happened during lunchtime, which is quite possibly the worst time of day for the failed auction. So I went against that, and it was actually a really good trade. So it reached 2R, and I went out for a dog walk, got to the park, and this flush down happened, and I look at my chart while I was out, look at Top Step X, and there's no trade. And I was like, what the fuck happened? And then I looked at it on the remote desktop, and I'm like, it reached target. That's nice. Because those sort of moments, they are very difficult these days. We have a lot of range-bound days, so it becomes a bit of a problem to kind of leave the trade unattended. It's not like it used to be. Market state changes all the time. But yeah, so first, hypo. Given the fact that this is an equity index, so VWAP, SEEB, long from about 55.30 or thereabouts, thereby ignoring that failed auction that might happen. Why? Because we were already built structure, so if we start wagging around, it's not really going to be a failed auction, it's going to be more of a rotational day. That kind of looks like a slow auction failure, but in effect it's not. It's literally just wagging up and down, making everybody as miserable as possible. So that would be the first setup. Second setup, how big is this initial balance range? It's still on the normal side, the initial range. It's on a slightly higher normal, but just under that 2/3 of average session range. That's still fine. So second choice here would be another long, and then we're going to look at lower probability shorts. So I'm saying sustained auction. So we go above, we sustain, but I'm telling myself join the auction from initial balance. So rather than jumping in, we need that retracement because it's not the strongest auction. And then see what happens. And again, I'm also going to have a look at some stats here. Those of us who have been doing this for a very long time, we're totally obsessed with stats. We're such nerds. It's unbelievable. But at the same time, it's very helpful because it takes out, like if you can find something that has over 60% probability, it takes out a lot of the bullshit and nonsense that you might see. So guesswork becomes minimized, so to speak. That's what you want. You want to use the stats so that you're not relying on your instinct, which can be done once you have some stats to back it up. And then if you feel like the price is doing something that the stats support, that's when the instinct should kick in, not before. So we usually have single breaks on ES by about 65%. So this is where SEEB alternatives, so something that looks for strength from inside the initial balance, also makes a lot of sense. There's so much dog hair in here. It's ridiculous. I need to hoover more. And by the way, I vacuum like every single day. That's my exercise these days. Green and red days by weekday. That's what I'm looking for. Tuesday, 69% green for the last 3 months on ES. 54% if we go to 6 months. Year to date, that remains. But in the last 3 months, that's been pretty strong. So I'm going to put that down as stats of relevance. 70% green. Tuesdays, 3 month. But then 6 month falls down to 54%, but still green. So that's a relevant statistic. Boring, I know, but to those of us who do this for a living, it's not boring. It's interesting. Like, I could do this for 12 hours a day and still not get tired of it. Is that weird? Probably. What sort of ranges do we have? We have 46 handles usually. But on a weekday of relevance, Tuesday, 39. Okay. And how much do we have now? 24. Okay. So that's kind of in line with this average session range high. I'm not going to touch that. Yeah, that's not really helping me much. PBJ. So I do this stuff for the parts of the method that we have. If you are a Silver Plus member, underneath the relevant lectures that deal with intraday events, you have that similarly displayed, but it's to do with the particular things that the method calls for. So I'm going to show you what that looks like in the Silver Plus, and obviously Gold members, but I don't tend to take on too many Gold people. Let's go into here, my dashboard. Crude oil still didn't tag 83, so we're going to see what happens there. Level 2 Silver Plus, that's what I'm looking for. Okay, so if I show you what this looks like, let me get rid of the bookmarks to make it a bit larger. So this is like the lesson in level 2, so module 2, lesson 3, market profile part 1. And if you go down, I talk about the point of control not being a very good level for running trades from it, unless you have something else as a really strong setup. So it says why POC is not a good level. Previous POC is great as a target, 35% frequency of occurrence. So whenever the price reverses and goes to POC, it has a 35% occurrence and success rate. So when it happens, that's what happens. But using it as a key level in ES, CL, and GC, only 10% of the time POC acted as a stopping point. This is literally right below the lecture, right? So it's an extra thing. You have the video lecture here where I'm kind of yapping about market profile, getting you familiar with it. And then underneath, I break it down why this may not be the best thing. And then if I go to some of the other things, let me just find it. It's not with every lecture because there's not always like the stats to back it up. I'm just introducing a concept. So here I'm talking about sustained auctions, so trending days. How often do gold and crude oil, which are my core markets, how often do they trend? Like truly trend. Strong auctions, single prints left everywhere. 42% of GC trending days. So I took this as a yearly sample size. Doesn't change that much. Like we've actually gone through the years to run the same algorithm on different parts, and it stays remarkably consistent. Crude oil maybe falls down to about 30% on some years, but generally stays about 35% of true trending days. You have 18% where it sort of pops outside of the initial balance and creates that initial balance breakout, but it doesn't actually go far. So thereby, it's more of a rotational day with a bit of an extension to it. That's how I would look at it. And those happen about 18% of the time. Non-trend days are the ones that don't ever break the initial balance. And I say that they're statistically irrelevant because look at this. It's like tiny amount of days. It was like 2 to 3 days when that happened. And usually it's some kind of holiday or, shortened day or something. Asymmetrical neutral days, which is basically what we had yesterday in crude oil. So where you have a probe to the downside, failed auction, goes all the way to the other side, starts creating single prints and keeps shooting up. It happens about 10 to 12% of the time. But neutral and limited auction days comprise the majority of the days. Okay? That is right underneath the lectures. And there's more of those. I have research of which level is more likely to cause a reversal, how often it happened, and how often it brought a meaningful reversal. So all of that is in the program. It's a very different education from some of the other things that you have out there. It's not just like, hey, here's 9 EMA. Now go off of it. This is like deep dive into what the market stalkers method really is. It's designed to help you raise the knowledge about these events, about the levels, why we use them, why I've decided to make it into a whole pro development program, why it's called the pro development program rather than learntotrade.com. It's a whole science of relevant data that will help you come up with some better results. However, PBJ, if you just want to look at overall stats, we do have Edgeful, which is a company that I am now affiliated with because I actually reached out to, well, they actually reached out to me, but I spoke to Andre, who's the CEO of Edgeful, and I decided to make them my partners because I like what they're doing. I like the fact that you guys can change stuff. So I'm going to post a link where you can go and click on that link. It's going to take you to Edgeful. And I think they're still only like $34. I know they have some new pricing things that they've just introduced, but I haven't actually looked at the new pricing plans. So let me log out and see what that is now. Yeah, so you have the starter for $39. Then they have Essential. Where is it? What's going on here? Yeah. So you get the equities, forex, and futures anyways throughout all of them. And then you have like extra stuff for $79 and then all access for $149. To be honest, I mean, for me, $39 is, it's more than enough because it gives you all the core stuff that we want to look at. But, if you want help to see how you can use this better, Andre or one of the team members over there is more than happy to jump on a call with you, even under this one, even under the starter level. So it's really good value. I mean, this is probably not going to stay this cheap forever. So if you guys want to jump on it, just do it. It's like it's incredibly useful. Like I've not had to do my own statistical runs as much since I started using them, but obviously I have some method-specific things where I still have to run my own algorithms every so often. So as long as you keep that in mind, we're all good. But yeah, very, very useful. Now on ES, I'm also going to add some lower odd setups, which would be failed auction short from ADR high, just to kind of finish it up. But again, I'm going to be a little bit careful with shorts because I'm not that keen on this stat, which is 70% of Tuesdays end up green in the last 3 months. So that's a bit of a dangerous game to play. BBJ, you're right. You did see them on Top Step. Yes, that's how I found out about them as well. And then we kind of started connecting through socials, and obviously because I've got a channel and I'm on Top Step, Andre reached out and he said, "Hey, want to have a chat?" And yeah, he was very helpful. I gave them some homework, to try and get that gap fill in relation to value, but obviously they need to create the value, or they need to find something already on TradingView that exists to be able to use the value area properly. So that's going to take a little bit of time. But they already have some stats in relation to market profile, like the initial balance breakout. You can modify it by session. So yeah, really, really good. Xavier, hi. Yes, I'm very good. How are you? Good to see you here. You're looking for longs on ES2. Yeah, that's a very good choice today. By the way, guys, I am toying with the idea to create a new backup YouTube channel, because there's some indication that legacy channels, I've spoken about this before, legacy channels such as myself that have been going since like 2014, but I wasn't like that active in it until probably about 2020 when COVID hit. That's when I started taking it a little bit more seriously. But before that, it was just like a channel that was just there. I would use it every so often to post like a weekly plan or something. But it wasn't, it wasn't something that I did with any great commitment. So I was toying with the idea to create a backup channel and to see whether they kind of push out some notifications and stuff a little bit better. And because one of my friends, we were talking the other day, and I told him that I started trading gasoline futures a lot more, he called me Petrol Pixie, which I thought was really funny. So I thought making a channel called Petrol Pixie might be the way to go. So if you see maybe some of the old content popping up under Petrol Pixie, yes, that will be me. And it's just like an experiment to see whether I can get some more traction, because apparently legacy channels from YouTube are kind of shadow banned in a way. They're just like, you're old, we don't want to know you, kind of thing. And the algorithm focuses more on newer channels that are created after the changes of the algorithm were done. And this is the reason why you see a lot of the big channels that are struggling with views. Like you have some people who have like over 1 million subscribers, and yet in the last sort of year or so, they've had like 1,000 views, 3,000 views per video. That's odd. That's very odd. And that tells a story that the algorithm is just not favoring channels that have been around forever. Which sucks. Really sucks, because obviously we all put a lot of effort into these. And now we kind of have to change that. But, it is what it is, right? We have to grow with the times. Right, so we might be having that failed auction now, auction fade / failed auction in crude oil. We never really tagged the round number. That can be a sign of strength. But let's see what they want to do around this initial balance. There could be a sign that if this high of 83.62 remains, that we then have an established range from 83.62 all the way down to 83. And then we can try and find a long in that range. This is where my Q points on a very low time frame, like 1 minute, 2 minutes, 5 minutes, might come in handy. So yeah, as you can see, starting the session, not jumping into trades, not being a grasshopper, just trying to get a good understanding of what is going on before you put your money on the line. rather than, oh my God, it's moving. Let's go in. Daily loss limit. Smash. We don't want to do that. So, yeah. There will be plenty of opportunities. Like, if this is truly doing what I think crude oil is doing, I just want to find that one good trade that I can keep for like 2-3 hours and be done with it. So right now the auction is trying to fail, but so far it's not really failing very well, which again puts me on to that idea of using the 30-minute candle range for my orientation points for any trades. Initial balance is 1 hour. It's not 2 hours, but in the first 2 hours, you have the most volume. So if you manage to find a good trade during the second hour of active exchange trading, that tends to have the most juice. It's the least annoying, and it has a nice kind of flow to it, which means you go into a trade, you pretty much get follow through within the first 10 minutes, and then you're sorted, right? Then, you just need to make sure you don't hold it forever and to manage the profits and the follow through that arises. Think ES on the house account yesterday. So that's exactly what I did. I had the idea that the ES is going to fail the auction around average daily range low. And then Nick for a tick saw like he did a very good read on the order flow around the micro order flow at that level. And we both agreed that that would be a pretty good choice. And it was one of the better trades that the house account did. It was very stress-free. And then again, similar thing with the one that I did on crude oil a couple of weeks back. It was also a house account. Also a very similar thing. Range, strong uptrend, average daily range low right below the whole area. All of those were done within the first sort of 3 hours, but away from the initial balance. So we waited for a good amount of data to come in, and then we just pounced. Very little drawdown. I mean, if we experienced like 5 ticks drawdown, if that, and it just went straight to target. That's what you want to aim for. But initial balance is 1 hour. Now, depending on the product that you're trading, it's going to have different start times, but I consider the initial balance to be 1 hour. So for gold, that would be an hour earlier than New York Stock Exchange. And for crude oil and RBOB, it'll be half an hour before NYSE, which is why you see different TPO periods and letters. So yeah, hope that helps. Hamster Capital. I like the I like the name. All right, so crude oil is still struggling. Like, we have 35 seconds left in this candle. And it's I mean, this is not a bullish engulfing to me. To me, this is like consolidation. So yeah, this is not something to jump in immediately. If this works for you as a failed auction signal, that will be more a matter of luck than skill. And the strong uptrend that we currently have on crude oil. But I'm looking for a really good entry here. Which means not at the top of the range, right? Because we have a range that was established. Bit of a meh price action on M30. So I really want to see it down at least around 83.18. That would be an acceptable area to get involved. I'm just going to see what RBOB is doing. Yeah, so does mine. So if you see the red boxes, there's 30-minute charts everywhere for now. We're going to drop down to a lower time frame when needed. But for now, it's literally just the red box represents the two 30-minute periods. So it's delineated in color boxes. So we have red, and then any ensuing extensions in blue, with the light blue being the value area that's developing at the moment. We have overnight VWAP and crude oil. Let's see what they do there. But yeah, I'm going to be super picky with my entries. I would rather not do any trading than suffer through 30 ticks of drawdown before it turns. Where did ES go? Just want to have a look at what's going on with equities. Right, so it is pushing. Okay. I'm glad that I didn't look at shorts there. So yeah, this 70% Green Tuesdays is definitely on the money there. And same thing, I would want to see initial balance high at 55.36 and a quarter before I do anything with ES. I generally stick away from like breakout type trading during the summer. When's Powell speaking? Do we know? Has he spoken? Has Daddy Powell spoken yet? Let's have a look. No, Goolsby was speaking. Powell have finished. Okay, when was that? Yeah, so they have spoken. That's probably why we're seeing this pop to the upside. That's all right. Thank you, Stephen D. Yeah, that's right. That's what I'm seeing on Financial Juice as well. Okay, VWAP giving a little bit of resistance there for crude oil. Yeah, so now it's just a waiting game. Which of these is going to get to the best area of interest at which time? Jesse James, welcome. I'm very well, yes. I've got a bit of a sore neck because I slept weird. So that's been giving me some trouble. Apart from that, I'm very, very well. I did a nice London crude oil, London gold trade. So that one went from Asia low, and then I took it at overnight high. So that was a very, very nice thing. And now I'm looking for a New York session setup. I've got a choice of gold, ES, or crude oil. I've got some levels. If you go backwards through the stream, I explained my process really well. And we've got some plans. So here is the crude oil and RBOB template that I use. So I was looking for a long around 83. So far we just missed that in favor of value high reversal and average session range low. So now I'm looking for a range to get established so that I can maybe find a long trade. I'm also looking for longs in ES. Maybe from initial balance high at 55.36 because we have some stats to back up that over the last 3 months, Tuesdays on ES have been 70% green. So we don't want to go against that, even though that kind of falls to 54%, the larger the sample size gets. So being very careful with entries, don't want to chase because summertime is definitely not the time of the year to chase. A lot of the time, what looks like a breakout will end up as a wow, and then you'll be sitting in 30 ticks drawdown, tearing your hair out. So I'm looking to get into positions somewhere at the bottom of the ranges or obvious bounce points, which for ES would be initial bounce high, but for this particular crude oil that went all the way down to value high and reversed, it would be somewhere around 83.20. So somewhere around the opening candle price of the previous 30-minute candle. Yes, I've literally just posted that. So I use a platform called Edgeful. You might have seen them on Top Step. The stat that I do this myself as well. I have algorithms that I've used that are in Silver Plus. We've literally gone over that, so I'm going to be repeating myself now. But in Silver Plus, you have some more method-specific stats below relevant lectures. So this is level 2 of the Pro Development Program. So we have Lesson 10, Sustained Auctions. I explain how to tackle sustained auctions, and then I also give you stats of how often these happen. And same thing for which levels are the highest probability, how often they occur. But for some of the more generalized things, I use Edgeful. So Edgeful is very good. And the stat that I was looking at here it was what was intraday range window, it's called. So you go to futures, you find the product that you want, and then you will see that. Let's see if I can show you that again. Huh. I can never remember my passwords. Anybody else have a problem with that? Ah, that's why I was, yeah, okay, fair enough. Don't need to remember my passwords because this is Google login. All right, here we are. So, Edgeful, it's the link, yeah. Playbooks you've got to have, and you've got to have them ranked by strength and probability. Like I said, this is the reason why I'm so confident in a lot of my setups. And when I call out a setup for the house account, it usually works. In fact, I'm not sure. Like whenever I was on and we were doing a house account trade, I'm not sure that we ever lost one, because there was the one with Anne-Marie, there was the one with Dolby, there was one with Nick for a Tick, just yesterday. So we have a pretty good track record on that. Yeah, so this is the intraday range window. No, that's not it. Green and red days by weekday. That's the one. And if you see here, 69% green for the 3-month sample. Tuesday, 69% green, 31% red. So this is why I'm not too keen to, to go against that. Yes, you do pay, and I do pay for Edgeful, even though they offered me like an affiliate thing, but I still pay for them because I actually connected with Andre after I'd already paid for it. So I'm on like their basic $39 per month, and you get all of this. So this is what it is. So you get all of these reports. It's all on the starter level. So yeah, really, really good. Worth their weight in gold, man. Like seriously, you don't have to run any spreadsheets, because you can, technically I was doing all of this before I knew how to code in Python. I was doing it on a spreadsheet, and then I would just collate and aggregate all the data. It's a nightmare. But yeah, so it's it takes out a lot of pain, let's put it that way. But if you want some more method-specific things, if you're interested in what I'm doing and how I get all the levels and why and times of day and all that, that's a part of the Pro Development Program. That's my intellectual property, so that's different stats, and I do have a team that can help me with those kind of utility style tools. But I'm also actually pretty good at, I call them my counting algorithms, because I don't necessarily run an algorithm to trade for me. I just run an algorithm to collate stats to see how many times a certain event happened. So I just define some very basic conditions and I run that through. Every so often I will repeat them to see whether they're the same. But to be honest, I mean, unless we have a black swan event, it's all pretty in line. Like, I've never really seen it go outside of the statistical averages of percentages, and how often trending days happen, how often neutral days. It's all very consistent, and I've gone back like 10 years in stats, in like chunks of about a year, 3 years, 6 months, 3 months. It stays pretty consistent. So I don't run them that often. I run them maybe once a year, twice a year, or maybe if somebody goes, hey, can you have a look at these stats, and it's maybe a product that I don't trade very often, then I will rerun it again. World King and one top. Sorry, probably butchered that. He says, D, love your trading actually. Thank you. I appreciate it. So you have Edgeful, so that's already in the chat. And Nightbot, my friend Nightbot, has actually put down the link to the main website where you can find the Pro Dev program. And again, it's not the cheapest, obviously, because I want people to commit. That whole thing, oh yeah, most people who pay for courses never go through them. Well, that's not strictly true, because if you paid, something that is a sizable amount, but not outrageously expensive, you're going to make an effort to make that worth your money, right? So that's the idea behind us not selling courses for $29 that will give you the university style degree. And to be honest, if I'm going to get involved with a Silver Plus, I don't want sheer beginners. I don't want somebody asking me, oh, but when is a low and when it isn't? It's like, do you have eyes? What's going on? Or before, I used to get some people who would be on Udemy when we were really kind of pushing that. Before I put all the courses on the main website, they were like, what would they say? What do you mean by broken through? It's like, you have a level, it breaks through it. What do you think I mean? So I just don't want, I think it's a waste of time and effort on my part for the level of expertise that I've got to, sit there and hold your hand as you learn what an order type is, what a limit order does, what a stop loss. That was another thing. People didn't know order type. So I'm like, if you go in on a buy stop, this is the problem that you're going to have. And they're like, what is a buy stop? And I'm like, just don't. Don't. Claudio, thank you. The check is in the mail. No, just joking. Claudio is one of our gold members, and he's gone through the Silver Plus as well. And we've even met up for coffee a few times. Hopefully we can do that again when you're back in London. But yeah, whoever has gone through the course, I would never pay for reviews or anything like that. So whatever few reviews, and I'm not terribly great at asking for reviews either, because I'm a trader, not really much of a marketing person. There are other people. It is probably why my channel is only at 15K, because I literally just do most of it by myself. And to be honest, I don't really consider it a super important thing to be pushing ton of ads and aggressive messaging has never been my style. If you want to learn, if you are a sort of intermediate trader with about a year or two under your belt and you want to advance and you're ready to get serious about it, that's what the course is for. Joshua says, 1 year novice trader here. I feel like I finally hit gold by finding you and your methods. Thanks for all that you share. Welcome. Very good to have you here. also realized that I've been trading not to lose instead of trading to win this past year. That tends to be something that everybody has to go through. And he also continues, this has been a huge psychological shift for me, stoked for what's next. Just don't, take it day by day, right? This game is one of the toughest games in the world, because even if you get to some of our level, there's still days when you're just not reading the market right. And that's the difference between a good trader and a bad trader. Somebody who's constantly in what Jack calls the club DLL, and you rely on that to bail you out, that's a terrible way to live. You're not supposed to have, oh, how do I not hit the daily loss? Or stop trading only if I hit the MLL or DLL. We need to stop way before then, guys. And then if you focus on good trading locations over chasing, that's probably going to be the biggest shift ever in your trading. Right, we got that pullback on crude oil. Now it's time to start losing your eyes and staring at very low time frames. So I'm going to drag over a 1 minute chart from Ninja with some equivolume candles. What are they? They are candles that smush volume and price all into the same candlestick. And I've kind of learned to like these recently, because usually you have volumes at the bottom, and I always forget to have a look at that. I stare at Bookmap on the right hand side of my setup here, which I can show you with my second camera. So Bookmap is sort of on this screen. Then I have sort of like accounts and NinjaTrader related stuff on the top screen that you can just see there. Typically I have Top Step TV and streaming stuff on the left. But if I'm doing my own streaming, I don't need to look at myself, so I'll keep it all up there. And then I have the main screen that I share with you guys that you can see here, right? So that's the setup that works really well for me. But yeah, so whenever I'm about to enter a trade, I do like to look at something like Bookmap, order flow on a micro level, even though the auction process is also order flow on a slightly larger time frame. But when it comes to that nitty-gritty timing, this is something that really helps. So one thing you can do is drop down to a 5 minute chart and see where the swing low is. Now I have a concept called the Q points that are pretty good for this sort of stuff. I'm not going to go into what Q points are. We have a pretty sophisticated algorithm that scans for an established swing. So once you have an established swing, it basically means you have some sort of a range to work with. And ideally, that's what you want for any entry. So you want to look at the range, and you want to aim to position yourself in the bottom quartile of that range. So right now, my Q points on a 5 minute chart are telling me 83.22 is the lowest sort of candle, that lowest price that is kind of like the time to stop monitoring for the reversal. Because right now we had a failed auction on a 30 minute chart, but very big candles that are more looking like what? A consolidation. This is not a bullish engulfing, because the opening price of the closing price of the engulfing candle is not that far from the opening price of the previous candle. That is more consolidation than anything. That's why I expected a failure of it, and I told you guys I want to try and get involved somewhere closer to that round number. So if I can nab a really good entry, like in the most ideal world, I will have a stop run down to 83, and then that's going to enable me to run a super low risk trade where I don't really need to use more than about 15 or 17 ticks, maybe even less. And if we can get that, brilliant. But there is another alternative, that if you have a really, really strong move that's happening, what can happen is that those Q points, which we're now at, cause a reversal. Think of it as a mini demand, and then they cause a reversal. So we'll see whether that happens. Obviously not as favorable as having that stop run, making everybody as miserable, and then going for it. Yes, I'm using bookmap. Here it is. And the reason why I want that round number is because of this stack of orders here. We have 111 orders sitting here. That's a pretty sizable number. So I would like to see that as a grab of liquidity before I position myself. So that's why I'm being like super patient. I'm trying to get that snipery trade. And I'm being extra anal about my entries because of that. Not to mention that we have ADR low just at 83, like literally there on the dot. So Jesse, I start trading for London session, and I usually spend about a couple of hours looking for setups, mainly on DAX, but we don't have DAX on Top Step yet. They're working to get it. However, we are starting the London session. Fingers crossed, 16th of July. We're going to try running it twice a week, so Tuesdays and Thursdays first to see how it goes. So if you're somebody who wants to look at the London session, maybe you know, come join me. They will be doing, you know, a whole bunch of marketing around that, and it's going to be on Top Step TV, not here. But for the first part, we're probably only going to be doing maybe gold, because gold tends to move okay. And yeah, it's going to be more a class than a live trading session where we're going to work on process, we're going to work on being patient and finding really good entries. And then once Eurex kicks in, that's going to be awesome. And then we can start trading DAX for London on Top Step as well. But unfortunately right now, still the only firm that does offer Eurex on TraderVate is Apex. So you have to go to them. But hopefully Top Step will you know, they will bring it, because you know, Apex is fine. I mean, I've never really gotten a denied payout from them, but I don't do any of the stuff that they don't like to see. But yeah, it's not very pretty to wonder whether you are going to get a payout at all. And I see that happening with people who have racked up a lot of cash, like 400 grand in like the space of a quarter. Almost always they will investigate those accounts, and it takes forever. So yeah, I would love to see Top Step bring Eurex, because then you don't have to wonder, right? It's fine. But like I said, Apex remains a choice for those who don't scale into trades, who don't size up like lunatics, who have positive risk reward. Those are the main points that you need to consider. All right, I'm going to move this bookmap over here because I want to have a look at the equivolume. But it looks like we are dropping down to that area of interest. And I'm just going to plop a horizontal line exactly where I want to see this flush to the downside. And if I'm going to get what I want to get, it's going to be a very straightforward trade. Jesse, so I partial my day in different times. So I will trade a couple of hours here in London, then I will have a big break, and then I will typically do a session from, well, if I'm on Top Step, that usually starts at about 8:30 p.m. But then I typically have a 90-minute slot when I will be actively looking for setups. Typically get maybe 2 or 3 setups in that session. And then if the day went well and I have a pretty good buffer, I continue to trade for the last 90 minutes of electronic session, and typically that's then equities. So I will trade in ES. I will try to find something in ES. So overall, whilst it might look like a trade like throughout the day, overall it's like 4 to 5 hours max when you smush all of it in. And then if I don't feel right, if I haven't slept well, I would just skip the London session altogether and just focus on maybe the last 90 minutes of the day. And I typically do anywhere between 5 up to 13 trades per day across all sessions. So not a lot of trading really. And generally if I'm doing more trades, it means that I'm grasshoppering a bit, so the 13 trade days tend to be the days where the market is not being easy to read, and I'm kind of struggling to get what I want to see. On the days when everything is looking right, it's like 3 to 4 trades and I'm done. Just gonna have a look at RBOB as well, because it's just broken through the average session low. And I also want to see what that looks like here. Oh, right. Okay, RBOB might be looking better for a long. I'll show you why. So, crude oil, if I put these side by side, let me drag it out. So I'm going to put always on top. Crude oil is still not crossing over that 9 EMA, whereas RBOB has. So I'm going to do an RBOB trade here. It's exactly the same, same analysis and same levels. Just on a slightly different product. And also, crude oil hasn't tagged that 83 yet. Let me try to put these side by side somehow. Maybe put this one at the top and this one at the bottom. Okay. Right, I'm in on RBOB on my live. This is the first trade of the day in my live account on Top Specs. There it is. And I'm also going to run that on a couple of combines too, just to keep them going. Then we're going to see if we can catch a bid from here. So far it's a bit so-and-so. I'm only risking 37 ticks on RBOB, and it's only a one lot, which means it's going to cost me like 140 bucks if this doesn't work, which is nothing. I'm just looking at bookmap here. Hold on. Second one didn't kick off an ATM strategy, so need to redo that. Okay, that's better. And the combine, there we go. Okay, we're in. Nothing else to do now but observe. I don't have a profit target, Jesse, so I don't really obsess over... oh, I need to make a certain amount. I just take whatever the day gives me, right? Hold on, let me move this as well. And this can be an even smaller stop loss. There we go. We do need that push though, because without it, it means this thing is going to go lower. And again, on these tiny little stop losses, because, you know, 35 ticks for RB is absolutely tiny because it's got like 460 ticks range. You can try a couple times. It's not like, oh yeah, no, try it again and I'm done, right? So you can try a couple times on them, but once they catch a bid, you get a super cheap trade. They're not really catching a bid yet. So we'll see what happens here. Crude oil is trying. It's trying. There's too many windows there. Let me get rid of that. So that's currently near the low of the day. Typically on RBOB, like if I don't want to watch it and I want to be relaxed about it, I will use an 85 tick stop. But that's if I caught it on a failed auction that already failed, and then I have a lot of space, so you have to increase that risk. I prefer to put my stops at the structure areas. But yeah, I don't have a profit target, so I have a statistically viable system that means that when I have a profitable day, it's usually going to be pretty similar. So I will aim to catch anywhere from 100 to 140 ticks per day, which would translate anywhere on a one contract from about 700, maybe $1,000, up to about $2,000, 2.2 grand on one contract. And that's absolutely fine for the prop accounts. But I think that the goals, actually, let's talk about that. I think that setting goals with profit targets should only be done to stop you from carrying on to trade and then giving it all back. If you're doing it to chase profits, that's a terrible mindset. Really terrible mindset. Because what I find people doing is that's what they're chasing. They're like, oh, I just need $200 more on the day. Oh, just $200 more. It's like, great. And then they start doing stupid things, chasing those 200. So effectively at that point, if you've already made 800 on the day, you are chasing a negative risk reward. You're risking 800 to get $200. Risk reward, very negative. So that's the way I look at it. And that's why I don't like going for targets, because on the day when the thing is not going well and, everything's messy and you kind of ballsed up a couple of trades, maybe chasing momentums, it happens. Chasing targets becomes completely irrelevant. So I don't advise that for anybody at all. Komodo Dragon, yes, there's a huge difference. So Pro Development teaches you the ins and outs of everything that I do here. So whatever you see me doing, that is described in pretty great detail. So I've had people who have spent 18 months very intensively going through the method. Excuse me. And they've raised their skills levels significantly. But the Funded Trader Blueprint is just the logistics of passing a course. You don't have levels there. I'm not going to give you my baby, my intellectual property and all the levels. It's literally just how to pass a challenge, what sort of loss per day, per trade, how to get everything sorted out so that you don't experience drama while you're doing an evaluation. I'm just going to clear my throat for a second. Hold on. All right, it does look like they want the 83 in crude oil. So I'm going to wait for that and then maybe try again. We didn't have a nice push. They try. Look at this volume level here. But ultimately, I think they still want to tag that liquidity at 83. And again, good news about cheap trades that you can try a couple times without putting a massive dent in your P&L. Come on, grab that 83. That's what you want. 83, 83, 83. Yeah, so Praneet says, lately I've been only taking on good trade setups and not setting a profit target for the day. Correct. In fact, moving away from all monetary values and moving everything into ticks, that is something that I advise everyone. I'm sorry, I'm going to have to sort my throat out. I've got like frogs in my throat. Frogs be gone. Okay. Hopefully that's the end of the frogs. We'll see. All right, so Komodo Dragon Blueprint is now 149. Yes, we lowered the price slightly for the summertime. Usually it's 197, I think. But yeah, for the summer, it's going to remain at 149. I might have to try this again with a wider stop. We have the lunchtime hour now. This is the only thing that is making me a little bit meh. Because time of day is a big thing. Like, you have to do the right time of day. And for this sort of play, if I wasn't on camera, I would probably wait until about 2 hours time, and then I would try this again. But sometimes you can get these like lunchtime hour drifts that happened earlier. Then typically it is a stronger setup if you can catch these before New York lunchtime. So it's like, you know, sometimes when I am on these streams, you know, I do trades that I normally would have been doing. So I'm gonna try this again because they're trying it again. So let's do that. Okay. All right, let's see if that works. I'm going to bring this up because, again, it's lunchtime, so might bring it to, let's say, 50 tick stop here. And then if it doesn't catch a bid, it doesn't catch a bid. We're then going to be waiting until the last half an hour. So there we go. Pretty similar entry there. Again, you saw it hit me for about 160, but it's fine. The upside for this particular trade is about $810. So the profit target for this is based on the core way that I calculate stop losses. Just like general targets that you can get within the day's range. So when I can find a trade where I can minimize that down from like 350 per trade down to like 200 or 150 or 160, I still leave the target where it is because it means I was able to get a better trade location. So target doesn't change. Target is still a core 2R from the risk model that we use. So like I said, the only thing that I don't like about this now is that crude oil is still not grabbed that 83 level. But, you know, it is what it is. We are at this level now. Bit of a bad timing for the lunchtime. We'll see. This is also something that summer does. They get they kind of miss levels sometimes because they're like, nah, it's good enough. And then lunchtime hits and you start getting these reversals very quickly. So yeah, it's catching a bit now. All right. Now, the reason why I have the EMA and VWAP and standard deviation bands on my charts where I'm trying to time things correctly is because they are very simplistic tools that can tell you exactly how far you are from the median average, which is VWAP, and how strong the current move is reversing, which is why I like to smoosh it into equivolume candles. And like I said, you can see that on normal candles as well, just maybe not that great. And there we go. So in about the space of, 2 minutes, we are now covering that initial loss. So whatever we make, sorry, dogs are barking. Whatever we make after that, assuming that it keeps running, that's going to be all profit. So yeah. So this is now in my Top Step Live second trade of the day. I did do some others in some of my other accounts, but again, this is just Top Step. AJ, hey man, what's up? Good to see you. Trying to catch this this long in RBOB. Was originally looking for crude oil to get to 83, but it didn't quite get there. Now we have the bloody lunchtime. So yeah, these sort of entries are pretty tricky because you have to make sure you time them correctly. If you are going in to catch a falling knife and you're not looking at carefully positioning yourself at the right time, you're probably just better off using a 5-minute chart and then waiting for the sustained movement. All I'm doing here is I'm literally nitpicking to the point of reducing my risk so much that instead of using 350, 500, 800 per trade, I'm reducing it down to like $200, $160 per trade, whilst keeping that upside. Because this is still the same trade, right? This is still the trade that has the potential to run for 200 ticks. And in RBOB at $4.20, you're looking at 840 profit margin. But because of the range and because of the stop losses that I normally would use, 85 ticks, that would be effectively a 2R, 2.3R multiples trade. So we keep that, but we try to position ourselves really, really well. If you're a more novice trader and you don't have like 16 years under your belt of staring at this kind of shit day in, day out, maybe not the best, because what's going to happen, you're going to get a lot of fake outs. Maybe you're not going to read things correctly. And, you know, even I was maybe a little bit too cheap on the stop loss there. And, yeah, but I'm very good at dragging myself out of those and not losing the idea that I had. So it wasn't like, and I said it, you know, I might need to try a couple of times here, because that's what usually happens when I nitpick on stop losses. Sometimes you're like, yeah, that's it. And then another flush comes and that's the one, which is what we're seeing now. So yeah, we'll see how far this gets to. I'm fairly confident in this trade because crude oil actually reversed yet again without tagging 83, which is a round number. we never really closed inside value. So, it's got a pretty good chance of rotating nicely upside. Yeah, AJ, I mean, for that, you might need to come and hang with me as a gold member, man, because that sounds like you have a combination of psychological problems and risk model issues. And without knowing more, without doing like a really deep dive into what you've done so far, I've given you a few pointers last time, so obviously you're still struggling with the same thing. You need to decide how you want to tackle that. Can you do it by yourself? Or do you need somebody to guide the process? I'm going to tell you, though, that without some of my mentors, without, John Garrity, without John Hoagland, by chance both my mentors are called John, I wouldn't be where I am now. I really wouldn't, because I didn't know how to solve some of my issues. They were the ones who pointed out a few things that I can do better, and they're like, hey, why don't you look at this? Maybe try that, maybe try this. And then they were very closely watching me trade. And to be honest, even now, like I have the risk team on Top Step that are very supportive. Me and Mick, we talk reasonably frequently. And whenever I'm really struggling, I give Mick a call. And I'm like, dude, I don't know what to do. It's like, when I had February and March, crude oil died on me completely. And, he was like, well, maybe take a look at getting in later. If you have a zone, why maybe, look at waiting for a deeper range. And I was like, oh my God, I used to do that. Like, what the fuck am I doing? Of course. So see, he kind of gave me an idea of how to tackle things. But the thing is, this is nothing that I've not done before. It's nothing new. This is something that I used to do before COVID, and then we had mad liquidity. Like, however I positioned myself, it went my way, right? And if it didn't, it was very obvious within like 3 minutes. So now we're not there. We have tighter liquidity. We have crude oil barely moving 132 ticks on the day. RBOB is pretty liquid, but it can be a little bit sketchy. It's kind of like the NASDAQ of the energy products, even though it's not as nervous intra-candle. But, it can be a bit tricky trying to catch a good trade from it, because it can slip you by about 100 ticks, and then it comes back, and you're like, what happened? However, I found that if I'm very careful, and if I use some of the volume on my side, and if I just wait and wait and wait for the right opportunity to pounce, it's actually a pretty decent trade. So, yeah. All right, so it's going well. AJ, some of my my gold members were joking that they want to get like a shock collar, and I have the remote. So every time they do something stupid, I just send like a negative reinforcement zap. Maybe try that, actually. Not the shock collar, but you know what you can do? Get one of those elastic bands that really fucking hurt when you're like doing stuff. So put it on your... So I'm going to give you a couple of advices how to do negative reinforcement on yourself. So whenever you do something stupid, or you realize that you're doing something stupid, slap yourself. And it creates a negative association with a negative behavior. If it's painful enough and you do it enough times, trust me, you're going to want to stop doing it. Second thing that you might want to implement is what I call the Bart Simpsoning, and that's in the program as well, actually, already in... I think it's already in level 1. Naughty. Stop that. I mean, it's okay. We're labeled as not for kids, so we're fine. Which is why I'm smoking as well while we're doing this. So the second thing to do is whenever you have a bad day or you do something stupid, have the next 7 days of writing out, I will not do this. I will not do this. Depending on the length of the sentence, you can either do it 25 times or 50 times. But here's the thing. You have to do it for 7 days before bedtime. before bedtime. Very important. Why? Because while we sleep, our brains have this lovely way of getting the new neural connections and problem-solving skills to work at a faster pace. So it's a technique that I've used on myself like for so many years, whether I was a musician or whether I was, doing, I don't know, like, let's say, sorry, I'm just going to check how much profit. Okay, good. Because I've just realized I've got a profit target on the combines. And I'm like, oh yeah, profit targets. Consistency. But we're all good. So yeah, writing things down before bed and then doing that for 7 days in succession. So it has to be done over the weekends as well. It's the fastest way to beat out stupid behaviors out of yourself. And then you can also do the positive behaviors using the same Bart Simpsoning. So for example, it's like if you find yourself that you're not going in on your levels or you're cutting trades early, but they end up going to target, just write down, I will hold trades to target, like do or die. No, none of this Lennying thing, of mice and men where you overmanage a trade and you fuck it up. There is a product that's called Guardian Angel Trader for Ninja, and it's got this setting in there where it locks you from getting rid of from moving your targets and or moving your stops. So you just can't touch it. Once you're in, it doesn't allow you to touch it. It doesn't allow you to shut it down, nothing. And it's a crutch because you have to learn how to do that yourself rather than going, I'll just rely on a piece of software to do it for me. So eventually you do have to do it deliberately. I play the initial balance. So if you've been here enough, initial balance range, yes. Ranges only when I'm timing things like this. So if I'm trying to get a really, really good entry, I would drop it down, but it's not necessarily time-based specific. It will be range specific, price specific. So here we had a low, here we had a high, and that's what I was basing my trade on, if that makes sense. Well, Joshua, it depends. So if it's a really strong candle with a lot of volume and it's nowhere near your target and the trade is just starting out, might be best to kill it and try again. But again, that falls under over management. When you're trying to see whether your system is viable or not, it's best to just leave it the fuck alone, have a zone, enter, and then play what I like to call do or die approach. Stop loss or target. But the target cannot be a bazillion ticks. The target has to be within the relatively normal range. So, for example, just to give you an example, RBOB has about 460 ticks of average session range over the last 10 days. But I'm only aiming for 193 ticks of profit, maybe 180 if it starts to do stupid things as we're approaching target, which is kind of happening here. But I think I have a smaller target on this one. I think this one is... No, I'm maybe not. So what is it? 185. Let me see. So 85. Yeah, so here I have a 170 tick default target, right? So we're almost getting there. But when it comes to being wrong on the trade, that's something that should come in as kind of micromanaging it once you have a good sample size of trades where you've just gone in, let it play out. 2R multiples, very good target to have as a default. I have a little formula in the Pro Development Program where you can take whatever the average session range is and then divide it by either 4, 5, or 6, and that becomes just sort of like a default stop loss. Now, if you manage to find a smaller stop, like what I've done with this RBOB trade, you actually can lower that further, but it takes a lot of effort. That's something that comes after, quite a good sample size, and then you're down to over-optimizing, not over-optimizing, just optimizing your entries and lowering the risk as much as possible. And, that's a whole different skill. But until you know that your locations and your core stop loss and your core targets can get reached at a rate of about 47%, 50%, 53% accuracy is banging on 2R multiples, okay? You make a lot of money on it. Whenever it kind of starts to fall sub 40%, that's when we need to look at what you're doing. But generally, the winning core sort of combination that's on a very fine balance is anywhere from about 40% accuracy up to 65 accuracy on 2R multiples as a default target, okay? That's all you need. It's all you fucking need. So many people overcomplicate things. They're like, oh, but if I get 80% profit, 80% accuracy, then it doesn't matter if I have a negative risk reward. Oh yeah? So what happens when that accuracy falls below 56%? I'll tell you what happens. You start bleeding money. That's what happens. You know? So this way, at least, even when your accuracy falls, you can be pretty much a complete muppet and still remain somewhat in profit and not bleed out your account completely, you know? So I've been able to withstand 2 months drawdown on TopStep, 2 months of drawdowns. I've been in the live account for like 120 days now, man. So, you know, and I've had a drawdown live on TV in front of thousands of people. Why? Because crude oil died on me. That's another thing. But I was able to keep the account. And the account is still alive. It's still fine. It's slowly getting there. But, you know, it's one of those things. So you have to be able to withstand drawdowns with the system, even if you're totally screwing it up. As long as you don't start stepping away from the number of trades that you do normally and all of that, then you should be fine. Okay, I don't like this candle now. But, I mean, technically we should reach, you know, we should reach VWAP. So, let me have a look at the slightly larger time frame here, because I don't want to get lost in looking for, you know, tiny little things. All right. Okay, so initial balance, let me just do some quick analysis here. Initial balance high is up here. 259, yeah, that's within range. And what's crude oil doing? Let me look at crude oil. I mean, this was a pretty smooth run up, you know, nothing ever goes in a single line, but at the same time, we are close to target. Still holding the 9 EMA, so I'm going to give it a chance. If it doesn't get there in about 3 minutes, I'm going to kill it. Sorry guys, I just need to concentrate here now. So do I trade off candlesticks only? No, I trade off a combination of candlesticks, bookmap, and TPO profile. So, and time of day. Time of day is a big component. So candlesticks are just like a supportive thing to visualize what is already happening. So it's not, you know, it's not all about candlesticks. And when it comes to the TPO profile just does things irrespective of candlesticks, even though it's on a 30-minute time frame. A lot of the events happen in real time, and they are, like, for example, creation of single prints. You know, if you're already in a trade and you see single prints, it's like that's not candle related, it's tick related, right? So wherever the ticks go, that's where it is. But I do watch the size of orders on Bookmap as well. I have done for about 3 years now. I don't recommend that everybody starts looking at Bookmap, because that's something that I've only started doing after like 11 years of being a trader. Because I've been a trader for 16 years now. Alright, so we're still pushing. Does size matter? Oh yeah. In trading? Fuck yeah. All right, I'm gonna book profits here, because this is a combine anyway, so it's kind of getting to. Okay, that's out. So that's about over $1,000 on the combines. And this is my Top Step Live. Still the same account. You guys can see Top Step X 2116. Same live account, same everything. Tomorrow is Wednesday, isn't it? Hold on. Let me just manage this trade, then we can talk. All right, let's take this. All right, so with that other loss, this is 451 net. That was 600 and whatever it was, minus the loss earlier. So that's second trade of the day. So if I can get another couple, that would be done. On this particular account, I'm at the moment just aiming for about 500 to 800. If I get to $1,000, that's great. That's like a really good day. Again, try not to oversize, not to do anything stupid. And this one actually got pretty fucking close to target, so I just wanted to take it. So now that that's off, we can have another chat. And then I'm going to go rest before Top Step TV. I'm going to kill that. So let's see. So Rita, is tomorrow a good day to trade? Tomorrow is one day before July the 4th, right? 4th of July, big holiday. I mean, it can go either way. It can be quiet. We're going to have a normal day. So it's going to be like perfectly normal hours. It's Thursday. Or is it closing early, guys? I was reading about this before, and they kind of tend to change the rules all the time. I think tomorrow is a normal day, normal trading day. So if that's the case, I mean, we can have a look at the setup and the price action, and then if it's really crap and it's not moving, obviously don't trade. Another option would be just to take 2 days off. Markets will still be here when you come back. You know, it's not a problem. But yeah, I don't know. I mean, the actual holiday days, like for example, Labor Day and stuff like that, when we have the shortened times, that can be really shit. Because it's like, there's no volume, there's nothing, it's horrible. So I usually go and do something else. What software are you using for charting? And literally, I can't understand your charts at all. Listen, so I use a combination. So first of all of the indicators that you see on these black charts are Blahtech indicators. They are on MetaTrader 5 from AMP Futures, which has CQG real futures data. So what you want is a server called AMP Global USA Live. I have a live account with them. I've been their partner and whatever for many years. I know Dan Culp professionally, personally. We've done some coding for them as well. So it's been amazing for me to use MetaTrader 5 because even though many people dislike it, I love it because I'm used to it. It works properly. The candles are not starting on weird fucking times like Trader 8 and Ninja. I don't know what they're doing with their data, but like all of the candles start weird, and all of the tools that they have on, they're so skewed, and it bothers me. It's like just from a statistical point of view. And then, okay, thank you, Super Bartek. So Wednesday, July the 3rd, early close. So we're not going to be trading, right? If it's an early close, fuck that. Go do something else. Don't waste your life. Don't waste your eyes. And then July 4, again, another early close. And then July 5th, Friday, as business as usual. So yeah, just take a couple of days off, guys. No one's going to care. I think I'm going to be on fast markets still. But I'm not going to be fucking trading. I'm going to lock up my live account and just trade the combines. I'm not going to risk my money. Like, forget about that. Okay, so we have some more questions. So I noticed that in my trading, I see huge red days was just an avoidance strategy. I would try to avoid the discomfort of having a losing trade or losing day. So if I would hold losing... So I would hold losing trades with hopium. Yeah, you have to change that. See, that's one of the things that I never, ever had. Ever. I've never been one of those people who is sitting in a losing trade and going, oh, it's going to turn around. Oh, it's going to turn around. Oh, what if I get my stop slightly larger? Oh, what if I just increase my stop loss while the trade is still active? But anytime you see me increase the stop, remember that I have that core idea of a certain stop loss size. I never go past that. I can go closer, but if I'm increasing the stop loss, it's within that core risk model. Okay, that's the big difference. If you're not, if you don't even have a default stop loss size, you need to find one for the market that you're trading using the formula that I've mentioned earlier. That can be just a guideline. It doesn't have to be like, oh, you obviously have to modify it for what you're doing because we're all different. But you have to change your mindset about holding on to losing trades. And let me ask you a question. Once you're out of the losing trade, how does it feel? Do you feel like a big burden has come off your back? Or are you like, oh, I wish I was still in that losing trade? I bet it's not the case. Once you click close and you rip off the band-aid, do you feel good? You feel relieved, right? You're like, thank fuck that's over. Well, when that's happening to you, it means two things. If it continues to happen to you, you either have the trade location wrong or the time or both. So something is off. Did you see this trade? So I've been working like crazy today to get that super good location. And because I nitpicked on the first stop loss, it did hit me, but it didn't cause any big drawdowns, right? It only hit me for $160. And then I got a trade that got me $650. So that's the power of high risk reward. But the second trade, if it started to go against me, I would have cut it like in 3.5 nanoseconds. I wouldn't have waited for it. But it caught a bid. So that's why I was able to hold on to it. If it carried on to go in minus, as soon as it gets to half into the drawdown, I'm cutting it and I'm looking for a better way to find a trade. It's one of the things that can really harm you. But at the same time, you might want to have a look at your maximum adverse excursion. If you're not tracking your trades, you need to start now. So drag out all of the stuff that you've already done. Put it in something like Edgewonk. Put it in something like TradeZella, somewhere where you can look at the stats. And look at how much drawdown your trades actually suffer before they turn in your favor. We're talking about winning trades here. And then, if that number is, let's say, 18 ticks, look to enter at MAE number rather than... So if you have a core idea, let's say, just, theoretically speaking, you have a level. Let's say we have that 83 level in crude oil. And let's say that I also entered, but it continued to slip against me. If it went down 18 ticks below the level that I was looking at, I would be out. And I would be like, hold on, is my trade idea correct here? Or is there maybe another way to look at this? Like, where are my statistical averages? They're very good reversal points. So you need to get better at your trade locations. You need to have a look at your stats. And you need to use that data in order to move forward. You're not going to be moving forward, clicking buttons and staying hopeful and losing trades. Nobody does that, okay? If you want to become a profitable trader, you have to change your mindset. Losing trade, immediately be on the guard. Don't be hopeful. Be like, oh, fuck this is garbage, man. What have I done? Click, done, next. You have to get that out of your system, okay? And what I would say is maybe do like a really small account, or if you have a combine, actually, if you're in TopStep, or in any prop firm, it doesn't matter. Something with a bit of skin in the game. That's not going to harm your personal circumstances. Just go and try to lose trades. So open up a trade that you think is a good setup. Goes down against you for the MAE number. Kill it. Do that again. Kill again. Do that again. Kill it again. Until you get comfortable losing trades. You have to be a good loser. If you're not a good loser, you will never make it in this game. Never. That's like a guarantee, okay? So you have to get used to cutting trades and being okay with it. I suggest weightlifting as well. If you can, if you're able-bodied, do weightlifting. You feel uncomfortable, close the trade, go lift some weights. Go run up and down the stairs. Go do some push-ups. Anything that's going to get rid of that emotional response, because your emotions, anybody's emotions, they come from our primal side of our brain. They don't come from our prefrontal cortex where all of the good, sort of realistic, nice, positive things are happening. No, they come from the most primitive part of our brain. And that's where you're letting control your trading decisions. So it's not you trading, it's the animal inside your brain doing your trading decisions for you, staying hopeful when we're losing. Oh, maybe it will turn around. No, it fucking won't. And if it does, you want to turn around and be at a better location, better spot, better entry, and then explore once those trades start working out, then explore why it worked out. Is there commonality? Like most people, I'm very annoyed when I see people who are teaching, 9 EMA, that's your entry. No, that's the entry technique. It's not a level. A level is an edge of a distribution curve. ASR high, ASR low. Anything aside of that is just a guide for an entry. So separate those out. And if that's all you're doing, you need to add more stuff to the way you're looking at the markets. I didn't get to my skills of being able to identify some of these trades that look like magic. They don't suffer a lot of drawdown. They go for a bazillion ticks, and I hold them for a really long time sometimes. I didn't get there by just going, I'm just going to use RSI and a couple of things and a couple of divergences. I'm done. No, I have a full understanding of the day. I have a full understanding why my trade doesn't work out. I don't sit here and go, what the fuck happened? What the fuck? Why did we lose? Okay, I go, okay, so that didn't work because we have this in progress. Like, for example, if crude oil had gone below the value, let me remove these. Now I can show you an example. So let's go back up to the 30-minute chart, okay? So I had an orientation point called the value area high, which is a distribution curve from previous day's trading. That's all the value areas is. It's called the value area because it's the fair value of previous day's trading. Okay? Does that make sense? So that's my orientation point. Why? Well, multitude of reasons. Let's not go into that right now. But if this hadn't turned around where it had, if it hadn't stopped moving, and if it went all the way down to smack through my trade in RBOB, which had exactly the same conditions, again, for the second time, I would then be going, okay, so now we have a value acceptance. My original trade idea is no longer valid. So what should I just keep longing on the high hopium to just go, oh, it's going to turn around? No, I reassess. I reassess market conditions. Is this still a good trade? Does this still make sense? Is my level still valid? If not, well, is there maybe an argument for the other side of the story? And how do I get in on that with as less risk as possible? Okay, so hopefully this helps. I know I can be a little bit harsh and passionate when I talk about this stuff, but there's really no need to be sat in losing trades. Just cut them, man. It's going to be so much better. Okay, so BBJ says, Linda Rashke, love Linda, she's amazing, has an article about having a purple elephant. Also, may want to write out the positive of what you will do. Yeah, I agree. It works for golf. It works for trading as well. It works for anything. Focus on the green when there is water before the green. Yeah. All right, moving on. We've got 2 Joshuas today. It says, okay, so you take what you know you can get and hold the target so you get paid when you're right. The do or die approach that I was talking about earlier is more a means to an end, okay? So I for sure don't hold all my trades do or die because I don't need to, right? I don't have that problem. But for a lot of people, they have a problem with over managing themselves out of a trade, and then the trade just does what it's supposed to do and they have nothing. So to prevent that, I put some of my gold members with that problem. Actually, Rita was one of them. And then we just go do or die. We come up with a statistically viable target, and you have to hold that or stop loss. Why? To gather the stats about how good your trading locations and your decisions are at those data points. Because all of the prices, all of the levels, they're all data points. So that's all that we're doing. Okay? Joshua Finley says, ignorance, I'm new to trading and trade off the DOM. Yeah, I would probably suggest get off the ladder for now and try to find some larger orientation points, and then maybe come back to the ladder once you have a good idea of what should happen at the level. You can watch them simultaneously. Just don't stare at a 1 minute chart. Just because I've been trading for 16 years, day after day, right? I've been doing this shit for 16 years straight. Professionally for 11 years. So I became a prop trader in 2013. Long time. I never teach people on the ladder. Ladder is the final step in the process when somebody has been with me for 2 or 3 years, and now we can add that micro order flow that might help us in our decisions. Otherwise, all you're doing is just seeing the forest for the trees. And overtrading and bailing out of positions too early because you saw strong orders coming in. But if the strong orders are not at the right level, they mean fuck all. If the strong orders coming in are not having an effect on the price, and in fact you have the opposite delta to whatever is going on, the price is actually going to go in the same direction. It's called a short squeeze, and it happens a lot in equities towards the last hour of the day. Actually, probably the last 10 minutes of the day. So you have to have context in order to use DOM, bookmap, footprint, all of those charts. If you don't have that context from a larger time frame, you're never going to have success, or you're going to spend like the next 15 years trying to get there. So we're trying to get you there faster, right? Couple of years, 3 years, that should be the timeline for going from zero to some profitability. And then from that point on, all you're doing is just refining the stuff that we've learned in the previous 2-3 years. Okay, moving on. Hey D, one side question, if not okay. I like TopStep, but it's not supported in my country. Okay, so trying Liberty Market Investments. Never heard of them, mate. Never heard of them. Are you in the UK though? Like what country is not? It's probably not UK, is it? Because it's not accepted. So let me know which country you're at, and I might be able to give you a suggestion for where to go. But Liberty Market Investments, never fucking heard of them. I suspect they're probably a CFD firm. Stay away from those. No CFD firms are worth it because they can manipulate stuff on the back end. You need a futures trading firm. Those are regulated markets. They're not in the UK. They are, from what I can see, in Canada. They're a Canadian firm. Are you in Canada? Because I see them headquartered in Canada. And again, never heard of them. Here's another question. So, is there a general monthly percentage gain? No, I don't aim for any profit targets. I either take what the market gives me and, get rid of it, or I just sit it out. So sometimes, like for example, the second part of August, I usually just take the second part of August completely off and I go on vacation. Intraday trading can rapidly compound an account. Yeah, that's true. I'm curious what a professional trader aims for monthly and yearly. I would say that really varies, and I don't aim for any particular percentage, but I can tell you that I have a rough idea of a percentage per trade on my six-figure accounts, which is 0.3% per trade. Not 1, not 2, 0.3%. On prop accounts, that's different because obviously we can try again, and it's not a big deal if you lose an account. Not that I like doing that, but, some people, they just have to go through that song and dance before they get profitable and before they learn what not to do. But generally, when it comes to gains, I've had anything from 2% gain all the way up to making 40% in a month. It varies wildly, depends on market conditions, depends on how I'm doing psychologically, depends on whether I've adapted to current market conditions quickly or it's taking me a bit of time, whether I've just been very disciplined and just smashing it, or I'm just kind of like not committed and just being there, whatever this will do. It really depends. So this is the reason why I say to people, even I have multiple sources of income, right? So when you're not doing well, if you don't have another source of income, it will psychologically come and bite you. Oh, like nothing will ever in life. It's like, I made the mistake to go full trader. It was, I think, 2015. I was like, I've got enough money. I'm just going to trade my own account. I don't care about anything else. And then I had a bad month. And then I had another bad month because I started doing stupid things. So I was like, oh, let me put you in my mindset in 2015. So had the first bad month and I was like, oh shit, mortgage payment is coming. How am I going to pay that? Like, do I have enough money to pay mortgage this month? I was making a joke on some of my earlier YouTube long form videos where I'm like, my dogs will be hungry. But honestly, it's like, it really plays with your mind. Because you're like, well, if I don't get paid now, what if I don't get paid another month and another month and another month? And you just start spinning the worst possible scenario in your head. Whereas when you have another stream of income to just cover your bills, it doesn't have to be like some elaborate business or anything, just something that can cover your bills, right? And then you can have windfalls in trading as much as you like. That works best for me. So I probably have about 6 or 7 grand of pounds, £1,000 per month that I have to cover every month. Once that's covered, I'm just like, whatever happens with trading, that's great. I can make solid trading decisions without it affecting me, okay? It's so important. Psychological issues can derail an account in like a day, never mind a month, right? So we have to be mindful of that. And I have to be very realistic with you guys. A lot of people never get there. A lot of people will forever have trading as a side hustle, okay? But to be honest, once you get to that point, it's actually pretty easy to go to the level where you're making a pretty penny, but you're still not that bothered about it, right? So it eventually becomes your first source of income, but somehow you're not I don't know how to explain it better. So you have covered your bills, you have a huge windfall coming from trading, that feels the best. And then you can use that to buy property, you can buy, you can go on vacation if you want, even though that's not what I like people doing with their money. So put it somewhere, put it in investments, put it in a pension fund, put it somewhere where it can grow rather than intraday trading account. Intraday trading should be like for running costs and, sort of a running income that it's sometimes great, sometimes not so great, sometimes just okay. But it shouldn't be, your primary thing for a long, long time. And if it ever gets there, awesome. That's the way you should look at it. Again, Anonymous, love that name. What's a good rate of return? I've seen traders do anywhere from like 2% a month and then all the way up to 600% a year on prop accounts. So what's good? Like, how much do you want? I suppose it comes down to what's a good return for you. If you're making 2% per month consistently, go open up a hedge fund, because that's right up there with the top hedge funds in the world. Like the best, richest fuckers that you will ever see, okay? Komodo Dragon says, Joshua Finley, D said remove all target crap. Totally agree. Just have tick or points in your chart and trade your strategy. It has been working for me. Absolutely. 100% agree. Do you like Joy Division music for trading? I don't like to listen to anything for trading because so I used to be a professional musician. Whenever I'm listening to something, I am going, how did they do that? Is there enough bass there? Is there maybe the vocals? Are they in the middle? Or did they put the backing vocals to the left side? That guitar could be a little bit lower in the mix. So that's what goes through my head when I'm listening to music. I can't fucking trade like that, right? So being a professional musician comes with its own problems. Like, I don't enjoy listening to music. I love it to death, but I just can't trade and listen to music. Xavier, yes, I was looking at that ES. I think I'm probably going to skip it until another hour and a half. And then if the opportunity is still there for longs, I might reconsider it. It's a little bit of a sketchy time of day right now. The stock market is less volatile than most of my romantic relationships. Thank you for sharing, AJ. The other day on Top Step, I said that the market is flatter than Kate Moss's chest. So that, that went down. Good read. Anonymous, I can lose trade without trying. Okay. I think everybody can do that. But try to do a good setup and then bail out of it early. Can you do that too? Yeah, I agree. If you're waiting for it to turn around and it does, it forms a terrible habit. Komodo Dragon, does Bullinox trading drawdown work well with the way you trade? Or I don't have a problem with the intraday trading drawdown, with the open equity trading drawdown, because of the way that I position myself. I never trade with massive size. I always start slow until I'm over that hump of having that trading drawdown anyway, which goes away in the funded account. It's not there like Forex firms. In futures firms, all of the trading drawdowns are done once you're over the minimum balance, right? So that's your maximum loss limit. When you make that in the funded account, there's no more trailing, okay? It doesn't trail forever. Slip Kid, what's up, man? Good to see you. Anonymous says, how much do I want? I don't want to leave a crumb for anybody else. That's very greedy. You're supposed to give. But good luck. Hope you get there, man. Like, sky's the limit, right? That's why we do this. AJ says, it feels like no matter what I do, whenever I enter, it goes against me. Very rarely it goes in green. That's a problem with the strategy, okay? How should I know what is a pullback? Well, again, context, learning how to do all of this crap, it helps, because then you can sift out sustained auction, pullback, whilst the sustained auction has already happened, versus complete reversal, and then we've broken another orientation point that you were looking for as a potential pullback, and then it goes into a failed auction. Context, making sure that you have orientation points, and knowing what should happen there. This is why I love profile, okay? Profile almost unequivocally on most days gives you a very clear idea of what's happening and whether you're wrong. Like let me highlight this. Let me see if you can see that. Let's move it to this side. There we go. Okay, so see this red box and then this blue box, right? So what are they? This is the first hour of trading range. If we failed to make another move lower and we went back into it to close the 30-minute candle inside it, that will mean that the sustained auction down is over. It's not a pullback anymore. Everything's turning. It's a rotation that I wouldn't expect to stop until we go to the other side, or at least to somewhere near the top of this range. Orientation points, okay? So how do you know if something is a pullback rather than a complete breakdown? Well, if it pulls back to the edge of the initial edge of the initial balance and reverses, that's a pullback in a sustained auction. Versus a trending move that just keeps going and keeps going and keeps going and keeps going. You have trending days, you have pullback into a trending move, you have failure of the auction. So 3 conditions that can help you decide exactly what's going on the day. Will vape smoking help me? I have a chronic illness where nicotine helps, so I doubt it unless you have the same illness. For me, it helps with pain, it helps with neural inflammation. And yes, I've got to say, guys, it has helped me concentrate more, but it took me 2 months to stop getting sick and throwing up from nicotine. So there is that. Now I'm totally used to it after 9 months of doing it. I used to be on the patches. Patches destroyed my skin, but I have to do it as a part of my treatment. So it's nothing, I know it looks cool. Like, I'm cool with the kids, Granny D is vaping. But, you know, it really helped me just to get rid of some of the really annoying things that were happening with my body. So my pain management becomes a priority for me. So yeah, I don't know whether it will help you. Try it. I'm not going to tell you to smoke, obviously, but if it helps you concentrate more, if you've got problems with ADHD or ADD or anything like that, problem focusing, yes, nicotine does help. It's an unpopular opinion, but ask any ADD person who has tried nicotine. It does fucking help them. It's a good nootropic. So that's all I'm going to say. But, you know, I don't advise it, but it's probably the best nootropic we've got at the moment. It is a poison, though, so pros and cons, like with anything in this world. Deanna, do you know if TopStepX is ever going to get TPOs? I think Robert is working on them. Just bear in mind that TPOs are not very easy to create on TradingView because it's a TradingView white label underneath. So I don't know. I mean, we'll see. But I know that Rob is working on it. Robert Cooney. And the team is obviously working on it as well. But Robert is the one who usually creates a lot of the indicators for TopStepX. So yeah, I'm actually going to be on with Robert for Marcus Talking with D in an hour. So you can join me over there. And then I can ask Robert for you. Hey, TPOs, do you know how long? What's happening? So yeah, we can ask him. All right, guys, I'm going to finish it here now. We're going to see if we can get maybe an ES trade or maybe another crude oil trade or RBOB trade, since that's what I've been doing today. Until then, until like 55 minutes time, thank you for being here with me. I really enjoyed the session. Managed to find a pretty good trade. We're a little bit up on the day. So yeah, let's carry on the conversation over on TopStep TV. I'll see you there.